Hello all, welcome to Bro Billionaire. So today in this video, we are going to discuss on option chain. We are going to check a couple of secrets. There will be one strategy. We are going to see what is option chain, what is open interest, how to select the strike, what are the major strikes where the option chain data affects more, how to find the option chain support and resistance, its examples, then on the expiry day, what is the timing where you need to be very careful. So these things we are going to check in this video. So an information video for you. So it will be very helpful for you if you are trading in options, and it will give you an insight, right, on broader picture of the market direction as well. Okay, so this applies to the stocks as well. Uh, but we are for this video we are going to just concentrate on the Nifty index. So this applies to even bank Nifty or the specific stocks, stock option chain as well. Okay, so the major things we are going to discuss here, the major secrets applies to all the instruments. So let's get started. So here on my screen you see option chain on Sensible. So if you type on Google option chain on Sensible, you will come to this page. I use Sensible because here there are a couple of options which I can change in the setting so that the option chain is more properly viewable as compared to NSE site, right? So here on my screen you see an option chain. Option chain is split into the multiple of 50 strikes. So here you see the different strike price, and here you see the last change of that price. So on the left side you see calls, and the right side you see put. So let's take an example of 16,500. So 16,500 call option for 17th expiry is available at 315 rupees for like one lot. Okay, you need to pay this much premium to buy one lot of 16,500 premium call, and same for 16,500 put, you need to pay 171 rupees to get the put option. So this is how the option chain is represented. On couple of other columns that we have is OI change on the both side and OI in lakhs. OI stands for open interest. Open interest is the major component of option chain. Here open interest represents the total number of contracts held by option buyers and option sellers. So whenever there is a new buyer and new seller, option chain open interest increases. Okay, so that is the main thing that you need to remember about the open interest. So here you see 16,500 has 11.8 lakh of call writers. Okay, we'll think from the perspective of call writers from here onward. Okay, so this also represents the call buyers as well. Okay, but yeah, we are just going to think from the perspective of call sellers or option writers perspective. Okay, so here 16,500 has 11.8 outstanding open interest. On the particular day, last trading session, there were 3.4 lakh new option writers added into this strike. That's how you read the option chain on the call side. Similarly, on the put side, you see here 21 lakh option writers are present positionally. So this is positional data. So on the OI, this data represents the positional value. So until the 17th March, like until this day, from every day's trading. So this has started 2-3 weeks back, right? Contract. So positionally, this gives view. This particular OI gives the positional view, and this gives the intraday view. So on last trading session, which was on 11th March, on 11th March, new change in the open interest was 10.6 lakh. So earlier it was somewhere around 10 lakh. So another 10 lakh were added on this particular day. So this is how you read the option chain, and this is how you do the option chain analysis. Okay, and yeah, so next thing we are going to discuss is the strike selection. So most of the time people select the options on the let's say far out of the money. So whenever I say out of the money, so here currently option future is trading at 16,650. So here 16,650 strike is called as at the money strike. All the strikes below this, if you are going to buy a call, then all the strikes below this are called as in the money strikes. Okay, and after the strike on the upside, if you're going to buy the call, these are called as out of the money strikes. So here you will see that out of the money strikes have lower premium, so you need to pay less premium if you are going to buy the strike price above the at the money, and you have to pay more premium if you are going to buy the options that are in the money. Similarly, on the put side, same thing, in the reverse order. Here 16,500, 16,650 is the at the money strike of put. Okay, and here if you buy like below strikes from 16,650, let's say 16,500, if you buy, you have to pay less premium going on the downside, and going on the higher side you have to buy like you'll be buying the put option with the higher premium, because these are in the money, these are out of the money, and this is at the money. So remember these three terms: in the money, at the money, and out of the money. So out of the money options you need to buy only when there is a low volatility and you are definite that trend is going to reverse strong, and that if the volatility is high, the option premium will be also be high. You will have to pay more premium, and it might happen that if the market goes sideways, then your premium will go. So out of the money you have to buy only when the volatility is low and you are definite that there is a sharp reversal going to be coming in. Let's say Nifty is at 17,300 and you notice that Nifty is going to fall downside, let's say 1,000 points. Okay, and currently the sentiments are still sideways, and you know that it is going to fall 1,000 points. Then only buy out of the money, and then the volatility will increase slowly. Your options will increase slowly as options will also increase fast if there is a rapid downside movement. Okay, same case for upside. If you consider that Nifty is at 16,000 and you consider that it is going towards 17,000, you buy 17,000 or 16,900 call option, and you know that there is a higher chance to go upside. So in that case only buy the out of the money option. At the money option are best for the expiry day. So if let's say today's expiry, it's better to stick with 16,650 or 16,600 calls if I think that market is going to upside. If the market is going downside, 16,700 to 16,650 are better options on the expiry day because they move rapidly on the expiry day. So whatever that is at the money, that moves rapidly. And in the money strikes on the intraday basis, you can do that, but don't go too much deep. If it is 16,650, better to stick with 16,500 in the money call, and yeah, 16,800 put for in the money options. Okay, so this is how you select the option strikes. So then on the option chain, major changes happens on the strikes. Let me just change it here. Let me just, so never like the volume on 50 multiple strikes are low, so never use these strikes basically, or use less unless it's you are not able to pay the premium. So think of only 100 multiples. Then apart from that, most of the time you would see that the strikes with zero, like 16,000 here, in the multiple of 1,300. So 1,000 or 00 strike, then 300, then 500, then 700, then 800, and then again 7, like these 00 strikes. These have mostly better open interest. Like here, this strike has bigger open interest, then 16,300, then 16,500, 16,700, 800, like that. So these are the strikes which you need to watch for when you are doing the option chain analysis. Okay, so here the major like support and resistances are built on these strikes: 00, 300, 500, 700, 800, and again 00, right? So these are the strikes you need to watch for. So that was another point that we had to discuss here. Okay, let's go and check the most important secret of this particular video is how to find support and resistance and how to use it. Okay, so here on my screen, whatever number you see on the put side, which is biggest number, that will be a support for this expiry. So here 16,000 is a major support here, which is having 35 lakh calls. Okay, then second major support is at 16,500, which is having 25 lakh, 21 lakh put writers, right? So these are the two strikes you need to remember while going for the expiry. Okay, next expiry. And on the upside, these are actually acting as a support. On the put side, whatever the numbers are higher, they will act as a support. On the call side, whatever numbers are higher, they will act as a resistance. So here 17,000 is major resistance, 17,500 is a major resistance, then 17,000, and after 17,000 there is a major resistance at, what is the strike, 16,800. So I'm going to consider 17,000 and 16,000 is a band for this expiry. 17,500 is too much, so I'm not going to consider that. But yeah, that is also possible considering high volatility. If it can fall on the downside, it can go on the upside as well in the same pace. So this is how you need to identify the resistance and support. So major support is 16,000 and major resistance is 17,000. Second major resistance is at 16,800 with 20 lakh call writers, and second major support is at 16,500. So these are the two key levels that you need to watch. So let's understand how this works. So we are going to check about the last expiry of 10th March and how I use the support and resistance option chain data to identify the trend. So on this day of 9th March, this was the move of the Nifty. Nifty closed somewhere near 16,360. It gave sharp reversal on the upside. You can see here. And on that day, the option chain data looked like this. Here you see 16,000. It closed near 16,340, and 16,000 was a major support. 17,000 was a major resistance. Second biggest strike, ignore the markings here. It was wrong marking and wrong analysis. But yeah, here second major resistance was 16,800 and second major support was 16,200. So the price was somewhere near 16,350. And on the next day, it opened directly at the second biggest resistance. So from 16,340, it opened nearly above 16,700. So here you would see that on my screen here, the trading view screenshot shows that around 400 points gap up it had given on the 10th of March on the expiry day. This is very huge opening on the expiry day. The premiums of at the money strike will shoot very rapidly on that day. Okay, if you have a 16,400 or 16,300 calls, they will be their premium will go very high. Okay, even 16,700 will have very high premium. But notice here that 16,700, 800 were second major resistances. So price from this point onwards fell on the downside. So yeah, initially it took some resistance and it was struggling near 16,700. So let me zoom this out. So based on price action, I draw this trend line and I was waiting. It gave the retracement. I was aware that it is going to fall initially and then it is going to go up so that it will eat the premium. So those are the tricks on the expiry day. So here you can see that it was facing resistance. So at that point of time, I was sure that it is going to fall. So hence I had posted on the channel that it is going to fall and go downwards from 16,720 levels, almost 100 points fall it was going to give. So yeah, based on that, I had given the analysis and it worked pretty well, as you can see on my screen. After that, I again checked the option chain data around 12:46. So this was the previous day on the 9th evening. I had taken the screenshot around 10:30 p.m. and on the expiry day, after analysis went valid and it was taking support here, I checked the option chain data again. So at that point of time, 16,700, 800 was a major resistance, 16,500 was a major support. So I was sure that this is the band for it to work. So if it is going to go down from 16,600, it is going to go down somewhere near 16,500 or maybe some points below this, and then it is going to rise back up again and expire in this range itself. So that was the idea around 1 p.m. that I had. So yeah, same thing happened. So another tip for you, that whenever support is broken on this, in this case, it started the downside. So whenever there is a support break, it will break by 20 to 50 points. So meaning to say that 16,500 was a support, but still it went till 16,450 levels. Okay, and then again sharp upside was given on that day. So here on my screen you see that around 130 it gave upside. Okay, here it took stop loss of many because most of them thought that after breaking day low, it will go up, like it will go downside. Most of them took put option here, and then sharp upside was given, hitting the stop loss of those people. So this happens around 130. We'll discuss that next. So here I had a view that again it will fall based on the expanding flat. So again it went on the downside, breaking these levels. Okay, and it went straight to the hell around around uh, around 150 points of drop we were able to capture after this. So, and again, after around 2 p.m., I was able to spot that 16,500 is a still major support. You would not see much difference here. So 45 lakhs open interest was still there from even after. So here you can see that from 55 lakhs, only 10 lakh were exited from that level. And it was not much change considering the expiry day. If it would have been, let's say 20 lakhs, then I would have been considering that it is going to go down more towards 16,300, 200 levels, which are next supports. But that didn't happen. Only 40 lakh, sorry, only some of them exited. 10 lakh exited the shorting. So I was sure that once it goes below 16,004, sorry, 16,500, somewhere near 16,500, it should take support and bounce back. So that's the same thing happened on that day. From this low of 16,447, you can see here it gave up move towards 16,400 plus. So that's what the things happen. So this is how you should use the option chain and use the option chain support and resistance on the expiry day. So this is specifically for expiry day. I will not say that this alone will work. You will have to combine it with price action and indicators to have a better probability of winning. Okay. Okay. Then again, this is an educational video, not an trading advice. You could lose your capital trading on the expiry day if your analysis is wrong. So you need to be very careful trading on the expiry days. So last thing in this our video we are going to check is 1:30 p.m. strategy. So this is the major part of this video. So on the 1:30 p.m., I would tell you here that there is a potential reversal or a stop loss hit time. So at this time, most of the people will think that market is still going to continue the trend, but that doesn't happen. Okay. So around 1:30 p.m. reversal comes, it takes the stop loss of the people and continues the trend. So that is the major thing I have observed since a lot of time. Let's say 1 year, since past 1 year, that is the same thing happening over and over again. So here we are going to discuss that 1:30 p.m. strategy. So yeah, let me open some screenshots that I have taken. 1:30 p.m. strategy. So here the strategy is like this. Notice the first 15-minute candle. So first 15-minute candle on 3rd March, it was expiry day. 10th March, it was expiry day. So first 15-minute candle was red, and after first 15-minute candle, the trend was downside. So notice if it trading below first 15-minute candle till 1:30 p.m. the trend was down. Same case here, it was trading sideways or downside. After first 15-minute candle was red, it was trading on the sideways downside. It has broken this candle, so I'm considering here it was the downside. Then price usually goes against that trend around 1:30 p.m. Okay, so the secret for this could be many people around 1 to 1:30 p.m. they are squaring off their positions. So most of them are coming from lunch, and then they are thinking that it's like call writers or put writers, whoever they are, sellers are exiting some of their positions around this time. So that's what creates fluctuations in the price. So option prices decreases very rapidly around this time. You need to remember that. So because of that, a reversal comes. So here you would notice that there are 2 green candles. So around this time, if you are still holding the put option, you will be in heavy losses. The put option will go around 50% to 60% cut will be there. Okay, if you do not have a stop loss, you will be in huge losses here. So you need to remember that around 1:30 p.m. you should not hold the same directional trend. Okay, if it's a downtrend, you should not hold that option. Also, do not buy reversal. If you buy, it will be again going to in the same direction. Then also you will lose if you don't have a stop loss or if you don't exit in the time. Okay, so the second point was the price usually goes against the trend. So here what you need to do is you need to observe MACD on 15-minute chart. So on 15-minute chart, MACD is negative here. Same case here around 1:30 p.m. MACD is negative and histogram is negative. MACD is negative in the sense MACD has a negative crossover. Here also negative crossover was already there. Around 1:30, the 15-minute candle was showing MACD histogram is red. That indicates the trend is still going to go on the downside after 1:30 p.m. Price reversal. Okay, after it comes up again, it goes down as per the MACD. So this is 15-minute chart. So observe 15-minute chart and then take a look at 5-minute chart. So if you already observed the candle somewhere near 115 to 145, if you see reversal candles and then price is consolidating again, then it is the signal for you that it is going to go down again. Even 20 to 30 points move in the price of index is very good move for the option buyers or sellers on that particular day. Premium erodes or increases very rapidly during the expiry due to volatility. So yeah, it's very good opportunity, and only on 1:30 p.m. if you if you trade only on this time, and if you are very right, you will be rewarded very much. Just remember that. Okay, you can even lose as well, but yeah, that's up to you if you are analyzing it properly. So this is what I have observed on 15-minute. If the trend is down, market is down, then it is better to take the same directional trade. Okay, so next chart here on 5-minute chart, you have to see around 1:30 p.m. on 10th of March. After 1:30 p.m. upside, it gave small upside here, right? These three candles eroding your premium. Then it gave this red candle. That was the signal for me to go short. So here I went short and was able to capture this move. So this is how you need to look at the and that's what our strategy is. You can go back and again read the strategy and you can practice, backtest it. Don't use it blindly. So that's what the advice will be for you. So this is how the strategy is. Let's take a couple of examples. So the examples are here. So on 10th March and 3rd March, we have just checked. The same thing happened. The trend continued on the downside after 1:30 p.m. move. So this is the 5-minute chart on 10th March where it went down. And on 3rd March also, you would see here around 1:30 it went up. And then this red candle gave us the confirmation that it is going to fall on the downside. It gave good move here as well. Couple of other dates on 17th Feb, same downtrend, green candle around 1:30, then trend continue on the downside. On 24th Feb, trend was down, price trading below first 15-minute candle, then MACD histogram was red. So here you would see that around after 1:30 the green move came and then it went down. So if you do not see a reversal, don't jump, because it is not fixed that it will happen at 1:30 candle itself on the 15-minute chart. It can happen at 1:15 or 1:45. That is the band I am considering, around 1:15 to 1:45. But I have observed it reverses around 1:30. So hope you understand what I'm saying. So this is how you need to do the this is the strategy for you. So hope you like this strategy. So same thing, we have checked all the examples of downside. What you can do is you can check the upside. The market was in upside during 20th December to 8th Jan. You can go on the trading view. So let me open the trading view. This is the trading view where you can go and backtest it. You have to do the paper trade for a couple of weeks and see whether this strategy works. So let's use this option of calendar, and I want to go to the 23rd December 2021 on Thursday, when the price had started the uptrend. Okay, here the market was sideways and around 1:30, so 1:15 it gave the reversal on the upside. Actually it was in upside. So this day was a no trade day because the price was not trading above the first 15-minute candle, or you could say here it gave the breakout, but again here you would hit the stop loss. So this would not work on this day, right? So here on this day it would not work. So there are cases that it won't work on certain days. So here if you add a MACD indicator, let's see if that is giving you signal correctly and you could avoid this trade or not. Okay, so on that day the candle was green but MACD was red, so this is a no trade day. If you enter, your stop loss will hit on this day. So same thing, you need to test on all other uptrending days and see whether it works for uptrend or not. Okay, that's how you should check. So hope you like the analysis. Subscribe to the channel. Thank you. Have a great day. Bye bye.